Hello, and welcome to today's NinjaTrader ecosystem event, Trading Supply and Demand Imbalances, Part 2. My name is Chris, and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number and email on screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time data. Our platform is always free for advanced charting, strategy backtesting, trade simulation. You could create your free account by following the link on the screen and clicking Get Started under the Welcome section. Before I turn the mic over to Will, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Thanks again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Will.
All right. Wow, Chris, thank you so much. Really appreciate the kind intro. And I'm going to go ahead and do this really quick because as I start talking, I have a tendency to get ahead of myself, right? So let's try not to do that today. Let me go ahead and get you out to the screen, and it'll be a little bit easier that way, I believe. Okay, very good. And I'm going to get up the information. Okay, very good. So yeah, all right, I got you. Hopefully you should see the disclaimer up there. I do want to say thank you, of course, to Chris again, because he's of course already gone through the disclaimer. And although it is good to at least be able to leave it on the slide for just a moment, of course, substantial risks and all of that, right? So I guess redundancy there is not necessarily a bad thing. But listen, folks, I want to say thank you for taking the time to be here out of your day. I know it's a busy one. What a week, right? What a week. Hopefully you guys, if you don't already, hopefully you're following us on our social media to some degree. We're trying to put a little bit more effort in that, just to throw some updates and things like that. But little things such as to say, tomorrow being aware of quad witching and all that. We can talk more a little bit later on things like that. But yeah, it's a crazy week. So again, I just want to say thank you for actually taking the time, to be here. It really does mean a lot. Okay. Hopefully I'll get you the information that will be most advantageous, and we can go ahead and get started with that because I know we are limited on time. All right. So 4:33 Eastern time. Let's get a move on it, Will. Okay. First and foremost, Pure Financial Academy. Again, thank you for the intro, Chris. We're an online community, right? We're dedicated and always have been and always will be to supply and demand trading concepts. So we provided training materials and software to individuals looking to learn about trading since sometime in 2009. So it's been a long and amazing road thus far. We believe strongly in the power of having others there to support you on the same path as yourself, right? I think we're all somewhat on the same path. At least I hope we are. Same struggles to some degree, and hopefully the same successes as well. So we'll see, right? So again, having that community there to support you is pretty important in our opinion. So our mission is, of course, to provide a very positive and very effective environment for traders and investors who do wish to utilize supply and demand trading methods and share their experiences with others as a team. Got some contact information there, but we'll get to that later. Of course, if you want to navigate out to the website at any time, go ahead. It's purefinancialacademy.com, and we'll look at that contact information going throughout the presentation. So in order to get this kind of ramped up, so to speak, that we kind of went into this from the beginning, and I said, look, here's the thing. We've kind of already given, we did a part one, so to speak, right? So what I wanted to do, I thought this would be a little bit more beneficial, especially when it comes to time. I said, what, why don't we just share what we've already done? Okay. So what I'm going to do, I'm just going to copy and paste that link, the one that you're looking at, by the way. This is, make sure that goes out to everyone. Yeah, so it's the link that you're looking at. I just don't know that it's clickable on, your screen with Zoom. I just don't know how that works. So I tell you what, there you go. There's the link. And what I would like for you all to do, I realize we're going to, a lot of you probably are stepping into this at part 2. Okay. So at your convenience, perhaps you can go back and review that recording, which is going to cover in detail a lot of the information that we're going to be fast forwarding through today, right? So we're not going to spend too much time on it. I think it goes without saying, but part 2, we really want to get to the further information. I'm pretty excited about it. And I hopefully you'll see my enthusiasm and understand why throughout the presentation. So we are going to talk about supply and demand imbalances. As I said, part number 2, without discretion. Okay. So as we get towards the end of the presentation, the phrase or terminology there, et cetera, without discretion, hopefully we'll be able to take that to a different level, kind of give it a further understanding, if you will. All right. Okay, so let's go ahead and get started. As I said, we're going to fast forward through a lot of this. I realize that there may be some questions coming in and so on. Given the time limitation, I always try to postpone those until towards the latter part of the session, if that's okay. So we'll, again, just review that recording at your convenience. We're going to fast forward through some of this and hopefully you'll enjoy the presentation. Okay, supply and demand price patterns. You'll definitely see these on that presentation. Okay. So we're not going to spend much time here. As I said, I just want you to simply have a recollection of what we've previously discussed, and or if you weren't in the previous webinar and or event, when you look at this slide and I move through it really fast, you'll be able to reference it from that video that I just, the YouTube link there. Oh, thank you, Casey. I really appreciate that for letting me know. So the link worked. Awesome. That's very good, because you never know, right? All right, so first we're going to look at the supply demand price patterns, which we've already done. These are the supply patterns. And then we also want to look at different types of patterns, demand patterns, right? So understand that there's only 4 patterns here that we're looking at. Okay, so we have 2 on the top, 2 on the bottom, but really these are just different versions. And as I said, as you go through that part 1, it's going to make a lot more sense. Okay, but for now, just understand that we're generally going to go across what supply looks like, what demand looks like, and more importantly, how we're going to go about finding those without discretion. Okay, so I think I have my mouse visible here. On the top, the one with the red bars, we're dropping. You can see the little box here, and then we decline away from that, right? So the top left as well as the top right, those are our 2 supply patterns. And on the bottom, okay, again, I hope you can see the mouse here, but we have a rally, we have consolidation, and then a further rally to the upside. Okay, so these are just 2 representations of demand, one having fewer bars, the one on the right having more bars, right? A greater number of bars. But suffice to say, they are both demand patterns. All right, so we talked previously about that, and we went a little bit more into depth in the video and all of that good fun stuff. And then we talked about demand, and we talked about a specific area to locate demand. And this is interesting. It's a very interesting concept, one which I really didn't put together, I'll be honest with you, like logically, I suppose. It took me a little while to realize how to quantify this information and how to, I suppose, validate, right, would kind of go into it. Because what I realized is probably the same thing you've realized. There are, supply and demand levels all over the place. What is a supply demand level? Like, what does it look like? There's a visual representation, though, that I'm referring to. Okay. And that picture is everywhere. And I further realized, I'm going to go ahead and move forward a little bit so I don't bore you with a blank screen there. What I kind of realized is that there has to be more to it. It can't just be one thing. Further analysis that I had, learned and developed over years and so on. I said, look, here's the thing. Name one strategy that works always. I don't mean 100% of the trades. I just mean in general that always works and it's fixed. And I couldn't find it. I mean, I don't think it really exists. So we work on a dynamic scale. Things are always changing, volatility, et cetera. So I kept diving into this, specifically, let's say one of my favorite strategies outside of supply and demand, if you will, would be Fibonacci ratios and pattern recognition. Okay. Well, when I learned to combine all of it, and I realized, well, look, what constitutes supply, what constitutes demand, I kept going. It's like a rabbit hole. I'm sure we've all been there, right? So I go down the rabbit hole and I figure out, look, in order to have supply, how do I know that the supply is significant? And I kept going down the rabbit hole. And one of the things I'll just touch on, again, is this more so touched on in the previous webinar. But look, it's as simple as this: locate demand at resistance, right? What is resistance? Well, I mean, we all know what resistance is, but essentially it's where we're going to find a battle, okay? And so if we're going up to that battle and we want to get through it, we need to see I'm just going to kind of use some silly phrasing, but we need to see the fight take place. And then furthermore, we need to see who wins that fight. Instead of, I think we probably would all agree, we don't want to be involved in that, right? We don't want to dive into it, but we do, if I'm going to go to a boxing match and, I always use the thing about Mike Tyson and Evander Holyfield or whatever. How do I know which one of those to bet on, or who I think is going to actually win? I don't have any idea. They're pretty, or at least they were pretty equal in my eyes and so on. So I don't really know until I have more data, more information. At the resistance levels, by locating demand there, it helps me to quantify that and say, okay, now I know when that resistance is taken out, I can conclude that the buyers won that battle. So now I have, you call it whatever you like, but I have, whether you say an edge or you have, whatever, in analysis, of course. So it helps me just further data, if you will. All right, so here's another version of that, locating the demand at resistance. There are ample amounts of resistance, right? You got resistance levels, resistance lines, you have Fibonacci, again, you go into the Fibonacci patterns and so on. So there's a lot of different types, but let's just keep it simple. So I want to look at the resistance levels as well as the resistance lines. I realize I am taking this a step further, okay? So I just want to, again, this is part 2. So I want to dive a little bit deeper into the logic and understanding of why I concluded this many years ago. And apologies for the sniffles, by the way. Somehow the allergies seem to have gotten me today. Okay, so yeah, so we're going to focus on the resistance levels as well as the resistance lines. And I'm able to, as I said, conclude that when that is defeated, I now know who won that battle. Okay, so extra information in the trading world is, I don't think, really too often a bad thing, unless we're looking at too much news data and so on. Okay, so conversely, supply, I want to look for at support. So essentially, we're just saying look for the opposing, right? So here we have a support level. We have the supply where we think we have supply. When we get the departure breaking through the support level, now I can conclude that indeed the sellers are stronger than the buyers. Here's that second version, okay? So support line, we come down to it. As I was saying with resistance, if you go, I honestly don't know, folks. I'm not trying to say that I know what the actual definition is, but I guarantee if you could Google, what's the definition of trading support or resistance, you know what I'm saying. You're going to go out and you're going to probably find some great answers to that, probably far superior to what I could give you. But at the end of the day, I think to simplify it, what I would say is support is exactly how it sounds. It's going to support the current trajectory, of the market, and resistance is going to fight that trajectory. Okay. So when we have an uptrend or a support line where I can connect multiple dots. So for example, I have structure number 1 here. I go and I make a higher high. I come back, reversion, if you will. And then I have another structure number 2. So what I can do is just play the little game like we did in elementary school, connect the dots, but it's astonishing, in our humble opinion, at how this very basic, probably the most basic of all, the very basic, simple information somehow has the most impact on the market, right? So anywhere from your hedge funds all the way down to retail traders and between and so on, everyone, I can imagine, to some degree focuses on a trend, right? That's probably some portion of their analysis. So suffice to say, it's relatively important for everything that we do. All right. So again, as we're coming down to it, I need to see the fight, right? I don't want to get in it. I'm not a fighter. I don't like to get in that, but I need to see it. I need to get the further data, who's stronger or more agile or whatever the case may be. ultimately, who do I have the belief that's going to win that? Well, I don't know, right? I don't have enough data. When I see that departure, when I see the support get taken out, broken, if you will, I now know. So on the next event, whole different ballgame, right? Not to say that I'm always going to be right with it, but that's the information that I'm looking for so that when we do it again, now I have a little bit more data in my favor, and at least I can make an educated speculation at that point. Okay. In other words, folks, if supply breaks through support, I'm going to look for the sellers, quite frankly, right? Because I believe that a downtrend is likely to occur, and or at least a down move. Excellent. All right. So again, just bear with me on the energy side. I'm trying to get I'm trying to give it everything I have, folks. You know how those allergies will get you down sometimes, right? So we're not going to let anything hold us down here, though. So what we're going to talk about now, that was kind of fast forwarding through the bit of the presentation. Again, go out to that link. You'll see far more and so on. But I wanted to get through that really quick. Okay. So I took you a little bit further than we did before. But now I want to get out to the tool. You'll understand. Remember earlier I mentioned the phrase without discretion. Now that we're getting into the tools, this is going to make a little bit more sense. And this tool in particular is, I think excitement is it doesn't do it justice. I'm super excited about this product. Been using it for forever, of course, but we've made so many advancements with it. And this is a tool that everyone can use. Okay. So the entire NinjaTrader ecosystem could use this tool because it doesn't really matter what your trading style is. Okay. So this is a order management, right? We call it the PFA order suite, but it's a tool to make order management much more efficient. Okay. So it's of course NinjaTrader 8 compatible, and it's designed to increase time efficiency by utilizing multiple entry and or exit methods directly from a drop-down menu or zones, and we'll look at that a little bit later, which is placed on the chart itself, right? Meaning directly on the chart. You don't have to go off the chart sideways or anything to that extent. It's just right there on the chart. So bracket orders, we have break-even trigger lines, and our unique, what we call an entry zone, they're easily toggled directly from the menu. Additionally, orders can be submitted excuse me, orders can be submitted to a user-defined different market. I'll explain this a little bit further than that of the chart it is loaded on. In parentheses there, you can see potential hedging. What does that mean? So let's say that I'm trading the SPY, right, which is the S&P ETF fund, for those who may or may not have known that. So I'm trading the SPY, the spiders. And I know you've probably heard a lot about hedging recently, especially with the, inflation, everything like that. It's all over the place. But if I wanted to take a position to soften the blow, so to speak, maybe I'm buying the spiders, but I wanted to hedge against it with a, portion of my position or what have you. So maybe I want to go hedge against that with the micro E-mini S&P futures. Okay. What we're trying to tell you here is that can literally be done from the same chart. You don't actually have to go to the micro E-mini. Okay. We can specify what instrument or market, if you will, the orders are going to be submitted to. I'm going to take this to a whole different level. I don't want to put the cart before the horse. We're going to do another event on Monday. It's a follow-up event to this. We can go further in depth with this. I don't want to spend too much time on it today, though. Again, the time limitation, right? But again, suffice to say, we can literally be on one chart trading these spiders, and I can hedge against it on the same chart without ever leaving, if that makes sense. Okay. All right. So the order labels can be managed, submitted, adjusted anytime, right? Orders can be submitted using the standard method. The standard method is what you're probably used to, right? It would be when we submit the orders and the entry gets filled, you then see that the bracket order goes directly to the exchange and so on and so forth, right? So then that's, level 2 data. That's where level 2 data comes in. So they can literally see your orders sitting on the exchange, whether it's market makers or some other retail trader sitting at home trading, they can still see your order, sitting out there somewhere, right? Wherever that may be. It is visible because it is on the exchange and it really can't be hidden. Orders can also, however, be submitted with what we call our trigger line method. And that is almost the opposite. It simply removes it from the visibility on the exchange because it isn't actually submitted to the exchange. And that's why we call them trigger lines. So in other words, trigger the entry when the line is touched, okay? Now, to be clear, we did not develop this with the intent of hiding the orders. We have really no, that's not advantageous, okay, to, very much. Because for the most part, we're more interested in swing trades and things like that. So I really don't care if they see, it's of no, matter to me if they see the orders or not. I really don't care. But let's say that I'm a scalper, right? And I'm looking for very, very small incremental moves in the market. I want to be in and out and so on, and I'm going to do a lot of trading. Well, that can be much more useful at such a point, because then I can, minimize the visibility of my orders and so on. So for those of you who are scalpers, you probably already know what I'm talking about. You probably got that feeling to where your stop is right there below the level, or wherever it is, whatever your trading style is. How did it hit my stop and then turn and go right where I thought it was going to go? Right. I mean, we've probably already been there and done that. I'm sure. I know I have, folks. But anyway, we'll talk more about this as we get directly out to the charts. As I said, I hope you see my enthusiasm. Super excited about. I love the order suite. Now let's look at the other tool. There's only two. Okay. I should preface the zone suite with this. The order suite is built into the zone suite, right? It's kind of why we call them a suite. But for all intents and purposes, let's say that hypothetically I was going to go out and purchase the products, right? And I really wanted the supply and demand zone so that I didn't have to factor in any discretion, et cetera. Okay, so I would not want to purchase both. I would just want to go purchase the zone suite because it also encompasses the order suite, right? Okay, so that UI, if you will, is built into the zone suite. So this is also, of course, NinjaTrader compatible. It's designed to reduce subjectivity and increase time efficiency by automatically drawing supply demand zones on a price chart. And trust me when I tell you, that's not even close to all it does, right? But again, that's the primary component. It utilizes price recognition, volume distribution, and market volatility in its calculations, which are displayed on the chart with custom graphics. They can be used for enhanced confluence purposes and for keeping track of historical data, which is fully back testable. So there's tons of tools built into this, so much, in fact, that we had to literally go out and build our own custom user interface. It's just so much, right? So much built-in functionality. So I'm not going to touch on that, but I'll be happy to do that in our follow-up event on Monday. I'll go through every single component if you like. And again, there's a lot. So the reason that they're all there for the most part is for automation purposes, to make our lives easier and to reduce and or remove the discretion and subjectivity. Okay. Again, we're going to get out to the charts in just a moment and look at that, but hey, let's get through the few remaining slides and then we'll go. All right. So what you're seeing here is the order suite as well as the zone. Remember, it encompasses the order suite. So really you're looking at the zone suite here. Okay. And right here, you can see that we have the unique entry types. There's several of them. I would just say focus on the buy and the sell, right? The RBR and DVD up and down bar, sure, we can go into that later. But for now, let's just focus on the ability to buy and sell directly from the chart, okay? Again, there is the nice user interface menus. We can simply click it with the drop down, click the button, and kind of move very abruptly, all right? So next we'll look at, as I mentioned before, there was also the ability to submit orders directly from the zones. Now, to be clear with this, you can only do this if you have the zone suite. This part is not built into the order suite because the order suite doesn't contain the zones, right? It doesn't contain all the extra kind of functionality. The order suite is to focus on order management. Then the zone suite is all the additional tools, if you think about it that way, okay? But again, what you can do is submit the orders with the click of a mouse directly from the zone in and of itself, right? So user interface. Okay, we can see here that there's a multitude of data. It's supposed to say data, by the way. I guess I'm not too good at spelling, huh? All right. So that being said, let's go ahead and get all the data up here. So you can see there's a lot of, as I said, bells and whistles kind of tools built into the zone suite. We have what we call our altitude grid, continuations, automatic trend lines, volume profile, market structure, so on and so forth. But what I want to focus on today, without going through all of that, because again, there's a lot, I just want to focus on these 4 items. Number 1, primary levels. Number 2, secondary levels. That's going to be 2 different menus that give you the ability. In fact, if you look up here, you can see that there's 2 different rectangles. The one on the left represents the primary zones. The one on the right represents the secondary zones. These zones, is very important, can be set to any time frame that you like, right? So let's say that this is a 60-minute chart. Well, you might be looking at daily zones and 15-minute zones. You just, I mean, whatever you desire. And all of this we go through, of course, in our training and our community membership, et cetera. Meaning what we prefer, and, kind of putting all the pieces to the puzzle together. But right now, again, please just remember these 4 components. We have the ability to look at 2 different time frames, technically 3, I suppose, if you want to look at it that way, but the zones in and of themselves, we can pull 2 different data points or data time frames, okay, onto the same chart simultaneously. We can also automate our trend lines. And finally, we have volume profile. The volume profile is the component here that's not going to necessarily help us determine a trade. It's going to help us refine our entry though, okay? So we use that very specifically. All right, let's look at some examples real quick. To the live charts we go, and Q&A, and so on and so forth. All right, so here we have the zone suite. Now this is the software at work. In fact, I will go a step further and tell you this. What you're about to see is it's actually the trades from the day. So when we go through these webinars, I like to read, I'm always trying to put new content, things like that, right? So the day that I'm going through and I'm creating this content, this is actually the day, right? So I submitted the information and I said, this is what, we're going to discuss on that day and so on. So you're actually seeing what occurred the day this was submitted. All right. And let me also preface this with what I've now said probably multiple times, but I love to be redundant with the things that are worth being redundant for, without discretion. Okay. So here, as you can see, let me back that up, right? You can see here that we have a supply imbalance, simply a supply zone, right? This is automated. The software did it for us. We don't do this, okay? We can, but we don't. So we have the supply imbalance, and here we have demand. You can also see the green zone below, right? So we have demand, which thereby exceeds the supply. So if you go back several slides, you go back to that previous part 1, remember what we were trying to show you. Where do we want to look for the demand? At the resistance, okay? Or supply, right? I mean, but it doesn't have to be supply. That's a whole different conversation. What's the difference between support and resistance and supply and demand, et cetera? Again, for a different day. But it could be either supply and demand. In such a case here, I'm trying to validate that demand. So I want to look for one of 2 things. Where's that demand happening? At previous supply and or at previous resistance, okay? In such a case here, we have our non-discretionary method. So what we're doing is we're taking the subjectivity, the discretion, if you will, and we're grabbing it, by the horns, so to speak, and we're just pulling it right out. We're saying, no, I can't, I don't need you, all right? More importantly, I don't want you. And the reason for that is, I'm just going to say this as humble as I can. I would probably make a ton of mistakes. Okay. So, I've been doing this for a very long time and I can still make mistakes. I mean, it's just how it goes. The mistakes typically come into play, I would say 99.9% of the time, when my emotions get the better of me. That's it, right? When my emotions get the better of me is when I don't have that game plan. But if I have the game plan and it's non-discretionary, then I can go back test it. I can look at it and I can, at the end of my day, when I've, maybe not done so well, or I did great or whatever, I can go back and I can look and I can say, did I do what I was supposed to do? Did I follow and adhere to my rule set, my plan? Yes or no, right? And it's not It's not a guessing game. So that's what we're looking at here, and that's how we're going to remove that subjectivity. So we have here demand exceeding supply. It's a key ingredient, if you will. Okay. This is the same trade that you were looking at. Let me go back a slide because I want you to kind of map and visualize this. All right. So you can see this area here. You can see that demand zone from below. And we won't go into all the details, but I would say it's important that we made a lower low there. Again, all of this is covered in our training and why we look at every single step of what we look for. So now we're going to go get a more kind of, a larger view. We really need to see the validation as well as the conclusion. So we can validate that when the demand exceeds the supply, right? In other words, when the high of supply is wiped out, excellent. Now I know that the buyers have absolutely proven to me that the sellers can't contain them, okay? More buyers than sellers, in other words, all right? Then on our initial retest of said demand, here's our conclusion. So we validated it, and then we had a conclusion, right? The conclusion in this case was great. Again, this was on the day that we submitted this information, but it was wonderful. So then let's move forward. This is the same day, same chart, etc. Here's what I want to bring your attention to. We have yet another supply imbalance. We also have demand exceeding that supply, okay? So you should be seeing consistency here. Demand exceeds supply, excellent. We now have a retest or reversion into said demand. Here's our conclusion. So we validated it, and we've been produced a conclusion, okay? That's to say price went higher. Of course, more buyers and sellers, that's always what price is going to do. Okay. And then we worked on the sell side as well. As a matter of fact, this one I was actually in when I was trying to produce this content. So I was like, okay, well, absolutely. Let's just use that, see how it goes. And then we'll put that into the presentation or whatnot. Okay. So here you go. This is on the sell side, right? So we're looking at the opposite now. We're looking at demand. We have demand, which again is automated. This demand was printed for us. We then have supply, which exceeds the demand. Okay, so if you can see here, the supply, the origination takes out not only just the one, but it takes out multiple demand levels on the way down. Okay, so we validated it. All right, and our entry, I wanted to notate this. I was like, oh man, it might look like the entry's off a little bit. So I wanted to notate that we were using market if touched orders. So that's why you don't see the entry definitively on the 41.95 quarter on the low of the zone there. We actually did have a little bit of slippage on that trade, given the sim engine there, and it's just how it works, right? So that's why we would never actually enter outside of the zone, however. Okay. All right, very good. And then we have the target. So if we're going to set up the entirety of our trade, we have a target before the opposing demand. So if I'm entering at supply, I want to exit at demand, and so on and so forth. Okay. We're moving forward into the trade. And then you can thereby see the conclusion, okay? So the reason that we exit, by the way, if we're going to enter at supply, we exit at demand because we expect a bounce, right? So where demand exceeds supply, I expect to see buyers maybe at least push back a bit, right? Where in the inverse, okay? Where supply exceeds demand, I expect to see the sellers push back and so on. All right, very good. So let's go ahead and move through this. I want to give you, I'm pretty happy to be able to offer this. We always try to do this specifically in the NinjaTrader ecosystem. I can't tell you how amazing, these guys and gals have been. And we're super lucky to even be in the ecosystem. We've been here for, I don't remember at this point, Chris, you probably help me out, man, maybe, but it's been over a decade. It's been a long time. Love working with these guys and gals. Again, truly amazing and a privilege. So that being said, without further ado, I want to just notate and a reminder that we're going to do a free event on Monday. So let me see if I can click this. I don't think I can. So that's okay. What I'm going to do is I'm going to paste this link to everyone. All right. And you can go ahead and sign up. If you're not already on our email newsletter, if you will, just click that link, sign up for it. Monday, we're going to go ahead and kind of rock and roll with the follow-up, okay? All right, so that's going to be at 10 a.m. Eastern Standard Time. I'm looking forward to that, by the way. We're going to deep dive and so on. but I need to move a little bit faster. So here are the offers, okay? The order suite, $399 lifetime. That's just a one-time payment, but you can get it for $279.30, and we'll carry this through the event on Thursday. For the zone suite, typically $14.97, you can get it for $1047.90. Okay, and I'm not going to spend a lot of time on this. I want to get out to the live charts and actually show you the tool in real time. But suffice to say, those can be found. I'm just going to produce those links as well. So that's the order suite. Okay. And I'm sorry, I'm not, typing all this in and everything, but I think that the links, or just click them and you'll kind of, you'll see what it is, right? Okay. So you can see what's offered here. You can see the discounts, super excited about it, but they're going to run through Monday. That's it. And then we're going to kind of carry forward. Okay. All right. And finally, the community. If you want to learn how to do all of this and just do it together, then join the community. We would love to have you. It's extensive. There's that's a lot of stuff that we offer. And I'd be happy to have that conversation with you, but it's extensive course material, core curriculum. You can kind of read through this and probably review the recording as well. And that will help you to get a better understanding of everything that's offered in the community. Or to make that even more simple, let me do this. There you go. There's the link to the community. So just go ahead and check all that out. I'm sorry for all the links, but I think that's probably the gist of it. All right. And just use your discount code here, Ninja, and that will get you the pricing that you see here. Okay. All right. Very good. So here's what I want to do. Live chart time, right? Let's do it. So here's what I'm going to do. If I had, which I meant to do this, and I apologize. I was going to have my visuals on, like the video, but it's probably better that I didn't, because you might see my eyes right now, my eyes kind of welting up, so to speak. I'm joking, of course, guys and gals, but all joking aside, boy, it sure made me kind of want to cry a little bit. I thought I was going to have this great, wonderful trade to show everyone, be simulated trade. I could show you in the event here, and it was just going to be wonderful, right? And I'm going to show you that right now. So here's what happened. I mean, this literally happened right towards the end of the day. Funny thing about it is I was actually doing a little bit of a clip on it. Because I was like, okay, well, I'll kind of capture it on a video, and maybe I can show them that way as well, if it doesn't, conclude and, reach the target of the stop or whatever. So I'm kind of doing this video thing. And yeah, it was right there at the end of the day. As you can see, time stamped, it's about 15, it was about 15:15, so on, right? So about 3, that's Eastern time, 3:15 or so, is when I started to really get keyed in on this, right? So it's towards the end of the day. We've had exponential rally to the upside. I won't go into all the analysis. Suffice to say, I expected a reversion, right? Maybe a little pullback to the downside. So I said, yes, I'm going to try to grab that towards the end of the day. Perfect timing for again, the session, but we don't always get what we want, right? So here's what happened. You can see that I literally drew this in, okay? And this remains, so from this part here forward, I had no idea what was going to happen. But essentially, this is where I started the trade. Okay, so that's where I was interested in that. Now, if we open this up, I'm going to get pretty granular with you here. All right, I told you there was a couple of rectangles here. So I'm going to go in here, and what I'm going to do is turn on the historical demand only, right? Focus on that level right there. Okay, so you can see the accuracy of our zones and so on. But what I was interested in is the sell side. We always try to validate what we're interested in doing. I wanted to sell supply, not buy demand, but I wanted to see demand. Here it is. Okay, so it got validated. Remember what we were talking about earlier? So this essentially validates my trade setup. Okay, and then I had my entry ready to go, and look at what it did. So all joking aside, this is what I was talking about, little tears in my eyes, welting up or whatever. I was ready to go at 44.82. Price came back up to 44.81 quarter, and off to the races we went. Now, I believe, if memory serves me correctly, I had a target of, it's also pointing to it. So I had a target set down here at 42.60 area, right? So it's on its way or what have you, but yeah, that trade didn't pan out, and I'm sorry to say that I was unable to show you that. But let's walk through a couple of the tools. We got 5 minutes left. Why don't you post in a question if you have it, while I'm just kind of running through a few things here. So the order menu, I could do this super fast, folks. If I wanted to go in and buy the market, I can do this so very fast. I have so much information. I can reduce and or increase my contracts. I could switch to the sell side. I can submit different types of orders and so on. I can go in, and if I don't like what I did, I can reset my orders. I can have up to 3 targets. I can have the trigger line, or conversely, I may say, yeah, I don't want that trigger line. So I'm going to buy the market with no trigger line, right? And then if I want to move my target, I can do that, move my stop, entry. There's a lot that we can do, tons of bells and whistles, but let's cover this on Monday because I'm about out of time. I don't want to mess up our presentation by going over time. But I will touch on this as you are posting in the questions. Here's the user interface on the zones. I can do the same thing directly from the zones. Okay. So if I want to do that, and then additionally, so if I wanted to go into the data in and of itself, meaning the order flow, I can really get granular and I can define, you know, where do I want to be the buyer, and I can refine that entry. Again, lots of bells and whistles. Let's talk about that Monday. Too much to kind of cover in such a short period of time. Here's the takeaways, okay? Supply demand. Supply, we want to be non-discretionary, non-subjective. We want to look for supply at support, okay? We want to look for demand at resistance. We want to see the fight, but I don't need to take action on it. I need to see who wins the battle because now I have information that I didn't have before. More of a conclusion, if you will. So an educated guess, right? Let's go at it that way. With probability, hope it's, you know, edge, probability, all these good fun words that get thrown around, but that's what we're looking for and that's what we're creating. And by doing it without discretion, I can hold myself accountable every day. Okay. All right. To the questions we go. Let's see here. Okay, very good. You guys were informing me about the sound and so on. Thank you so much for that. Okay, back to the, yeah. Yeah, Evander beat Tyson. He bit him on the ear. Yeah, absolutely. I was way back, right? So there, Jeff, you were saying there are a lot of false breakdowns of support and false breakouts. So how do you trade those scenarios? Join it Monday, okay, because I literally have 2 minutes left. If you don't mind, click that link. Look at, you can unsubscribe anytime. It's not, we're not trying to, there's no commitment. We're not trying to hold you anything, okay? But at the end of the day, we feel very confident that we have enough information that's going to make you want to stay forever. Maybe you don't, that's fine, right? But again, you can unsubscribe. So just to do that, jump in there on Monday, ask that same question, and we can literally go through it on the chart. How about that? Hopefully that will work for you, but I love the question, by the way, Jeff. It's wonderful. It's absolutely wonderful. And we absolutely do cover that in our training. So don't worry, I'm going to probably be able to get you a pretty good answer on Monday. Casey, that's awesome, man. Thank you so much. So, wow, that's amazing. I really appreciate that. Orders submitted on 2 different markets and also hidden from level 2 data. 2 great benefits indeed. We think so too. Thank you so much for the kind words. Most appreciated. Oh, David, I'm so sorry to hear that. You didn't see what we were trying to show there. All you saw was the cover screen. I'm sorry. Hopefully that gets worked out. Maybe you can review the recording. Yeah. John, thank you so much. The same here. He says, I'm so hopefully you weren't having the problem too, but if you were, oh goodness. Well, look, if you all were having a problem, I'm sorry about that. I'm unaware of it. Hopefully the recording will fix that. But again, don't worry. Jump into it was the link that I sent. Just jump into that free, just get on the newsletter. We'll send you the event invite for Monday and we'll get you taken care of. No worries. No worries at all, folks. Let's see. Okay, a lot about that. And we're on the time marker now. So what time frame do you folks want to identify supply demand? Alam, I'm sorry if I apologize. There are essentially 3 different pairs of time frames that we focus on. I can discuss those further on Monday as well. But yeah, again, 3 different pairs because we want to focus on longer term position and long-term trading, intraday into swing trading, and then just intraday scalping. Okay, so 3 different things requires 3 different pairs of time frame. How do you consider news impact? Yeah. Knowledge, I love the question. Let's talk about that one on Monday too. I would absolutely love to go down that question with you. We've been talking a lot about that. In fact, if you just look on our social media, you'll probably see a little about that. Does your systems automatically trigger the buy or the sell when we pull the trigger? There's a one button push, boom, submit, good to go, right? Yeah. So that's how that would work. What link for Monday? Okay, here's the last thing I'm going to do. Thank you so much for your patience, Chris. Really appreciate it. I'm going to get this one link and then I'm going to let you take over. I really look forward to seeing you all Monday for sure. There's that link for you, Jeff. Okay, just get signed up there. And like I said, take advantage of the discounts while they're there. They'll be there until the session on Monday. And that's a wrap, folks. Let's call it a wrap. I'm going to turn it back over to you, Chris. Thank you all so much. God bless you all. Have a great rest of your day. Okay. Bye for now.
Thanks again, Will, for taking the time to share with us today. Enjoyed today's session. We hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of Pure Financial Academy and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.